Good morning, everyone, and welcome to the European crossover webinar. We just got some data. We've got Italian industrial orders, which have actually come in at 1%, year over year, up 0.3. Eurozone current account came in at 28.15 billion. Prior was 26.6. And that's it. We do have UK CBI trend orders, and that comes in that'll be at 6 a.m. Eastern. And as I mentioned yesterday, we do have New Zealand dairy prices. Building permits and housing starts come into the U.S. session at 8:30 Eastern, along with Canadian manufacturing sales. That'll be at 8:30 Eastern. And that will be it for today, at least. We did see the euro go and make a move yesterday. Hold on. There we go. So we did definitely move higher. We actually got above our bias chart resistance, which was 1080. I think we made it up to 1090. But the key was, as I mentioned yesterday, is we needed a close. If we can get a close above 1080, that would actually negate the downside, the bias here on the euro, and open the door for the market to go higher. But we weren't able to close above that 1080. So we've gone and pulled back a little bit, not a whole lot. I guess the bigger key story continues to be these equities. Holy smokes, I mean, golly. This thing is just relentless. Look at this, golly. We actually closed. The key level yesterday, I was mentioning in the chat room, was 30.23. We hit the stops going towards that. I think we may have tagged 33.23 on a trade or two, and then we did go on and fade back a bit. But you can see here in the Asian session, we've reasserted ourselves. We are even above 30.23 at this time. Take a look at the Dow. Yeah, right now Dow futures are at 20 right on the highs, just about 28,087. Holy smokes, can't even believe it. S&P futures 31.29 a quarter. Their highs are at 31.29 now, and Nasdaq. I mean, what a move! Now Nasdaq hasn't taken out yesterday's high, although S&Ps and Dow futures have. But we are still pushing higher. Holy smokes. I actually took a quick short in the Asian session yesterday, and I'm glad I jumped out. I had an opportunity to get back in again, but I am glad I didn't. It's not my forte to go and have orders when I go to sleep, so I was able to grab something real quick and then get out, and certainly don't regret not getting back in. If I had, I'd been stopped out anyway. Would not, especially with the way we're running right now. We'll see how that plays out for today. I thought it's very important, at least for the S&Ps, well, that's for yesterday, that they would need to get above 28, get above 31.23 on a close in order to extend this leg up higher. We actually sold off down to, 31.16 in Asia before recovering. And now look at this, we're reasserting ourselves to new highs again. Cable made that push up to the pivot of 29.80, and dollar CAD is continuing to languish down here. So we're going to take a look at the news. The news is very, very slight also. Bear with me. So the Australian dollar, unsettled as the RBA sounds dovish. The Australian dollar swung lower on Tuesday after the central bank said if it had seen a case for cutting rates this month, a dovish surprise that led some investors to narrow the odds of on a future easing. The Aussie slipped to 67.87, moving back towards support at last week's trough of 66.70. That in turn dragged the New Zealand dollar slightly down to 63.86. The Kiwi did grab further ground on the Aussie. Minutes of the RBA's November policy meeting showed the board agreed a case could have been made for immediate easing, but decided to wait and gauge the impact of the 3 cuts delivered since June. We view this information and its inclusion in today's minutes as a dovish tilt, said Gareth Aird, senior economist. It appears that the decision of on hold was not made lightly. The board also noted the further cuts in the already record low 75.75 cash rate could have an adverse effect on savers and confidence. Surveys of consumer confidence since June have shown a pattern of sharp falls after each rate cut, and amid worries of what outlook would have been grim for rates to go so low. To us, this means that it's unlikely the RBA will cut the cash rate again in December, said Aird. But with little progress in achieving full employment expected to be made early by next year, we expect another rate cut in February. The futures market largely agreed with the implied chance of a December cut edging up to around 30%, while February was at 72%. The minutes will whet appetites for a speech by RBA Governor Philip Lowe on November 26, entitled Unconventional Monetary Policy. Analysts generally assumed the central bank would not want to take its cash rate below 0.5% and thus would have to resort to other measures such as asset purchases or lending to banks at super low rates. Board investors were encouraged by the RBA's tone and took yields on the 3-year paper down to a record low of 0.77%. The dollar steadies after 3 days of losses as trade deal hopes dim. The dollar stabilized against a basket of other currencies on Tuesday as 3 consecutive days of losses as investors waited for the release of the minutes of the U.S. Central Bank meeting at the end of October when policymakers had cut interest rates. Global macro hedge funds had ramped up their dollar selling for a 3rd week, according to latest weekly positioning, and some market watchers say hawkish policy minutes could trigger a dollar rebound. The greenback has hit a trough since late last week as hopes for a preliminary trade deal between the U.S. and China evaporated. Expectations had grown that Washington and Beijing would sign a so-called Phase 1 deal this month to scale back the 16-month-long trade war, but those hopes received a setback on Monday after CNBC reported China's pessimistic about agreeing to a deal, which suggests a resolution to perhaps the biggest risk to the global economy remains elusive. Trade headlines is dominating sentiment, but in terms of the key event, the release of the Fed minutes will be a big one for market participants, says Morton Lund, FX strategist or Nordea. Against a basket of rivals, the dollar index, the greenback, was broadly steady at 97.84 after weakening more than 0.6 in the last 3 sessions. Elsewhere in the currency markets, the Australian dollar fell to 1/16 to 67.99, declined to 26%, or 1/4%, I should say, to 73.82 yen. Australian Central Bank agreed to a case could be made for another cut in the 75 basis point cash rate. Its November meeting, given unwelcome weakness in wage growth and inflation, and minutes published on Tuesday showed. Sterling held firm at around 29.50, with pound buoyed by polls pointing to a victory by the ruling conservatives in the upcoming elections. With that, we're going to move into our analysis. Bear with me, I'll just do something real quick. Okay, great. Let's go on and just catching something real quick. I sent something on Twitter. Bear with me a moment. I know if I wait till the end of the show, I'll forget, so I need to send out a message. But let's go on and get on with the euro. So it says the euro continued its upward ascent from Friday's move, reaching 1090, but unable to close above the bias chart resistance, which was 1080, that would have negated the bearish picture. The bias chart resistance remains 1080 with support at 1035. So that 1080 is still we're gonna go and keep it there in place until we can actually get above it. And if we can get above it on a daily close, it certainly would negate the downside picture. And support, as I mentioned, on the downside is going to be 1035. I believe that may have been actually the same. Well, actually, we had 1018 yesterday, so we've actually kicked it up to 1035. Well, you can see right here where we are bumping up our heads against the pivot here in the cable. Cable challenged the pivot 2980 with the close coming up short at 2951. Resistance remains 2980 with the next level beyond that would be 3050. Support is 2884 followed by 2840. So 2980 is still going to remain the resistance here, and support, we're going to park it there at 2840. That may be a bit of a dip, but if we were to go in and rotate lower, that's where it would go and come in at. So we're still over here challenging this pivot, and we've seen that. We've shown that multiple times. Look at how far this pivot goes back. We're talking about almost a year and a half almost. If we can get beyond that, then we're going to go and make a run up here at 3050. The key thing is, and I was talking about it yesterday, I think we can get beyond as far as just close above it and then start to push the levels a little bit higher. I don't know. I'm not don't think it's going to turn around and go gangbusters, but certainly I think that's where the market wants to go and push to. With that, we're going to move into the Aussie dollar. So the Aussie remains dead money. The range is 67.72 on the downside, with the upper side at 68.50. And despite the news that we saw, not news, but the potential dovishness by the RBA, we moved a little bit lower, but it hasn't even taken out the most recent lows here. So once again, no changes here with the Aussie. As I said, to me, it's dead money. 67.72 on the downside, same as yesterday. Upper side 68.56, and we're just sitting here doing a whole bunch of nothing. And with that, we'll go on and take a look at the Kiwi. And what we put on here was no change in the Kiwi. I mean, the Aussie's dead money, but these ranges are unbelievable. This is crazy. I mean, look at yesterday's range was even worse. Holy smokes, what was that? About a 25 pip range yesterday, and the day before was about a 30 pip range. We're just not going anywhere. And about a 20 pip range here today. So it's just no changes. In the Kiwi, it's 63.26 on the downside, 64.36 on the upside. No changes. Let's go and move into the dollar CAD. So it says the dollar CAD appears on its way to 31.84, which will be the bias chart support for Tuesday. That was the analysis over the weekend. We're looking for a move to 31.84. Resistance remains at 32.50. So the difference is today we've gone and moved the bias chart support from 31.96 from yesterday for the area that we're looking to target. Now, we do have Canadian manufacturing sales today, but as I mentioned, you can see the Gravestone Doji from a few days ago, and we had 32.69 as our bias chart resistance for the entire week, all last week, and we could never get beyond 32.96. Now, we thought the potential was to get to 33.09, but we said we'd take a pause despite the prior Friday's close, not this last Friday, but the Friday before. We thought we would still take a pause around 32.69, and we could never take out 32.69. I think we took it out on Wednesday by about 2 pips, I think it was. And then, or Thursday, and then we, never got, it was kept, edging a little bit lower from there. With that, we're going to move into the Peso. Bear with me. So the dollar peso reclaimed 1926, closing at 1931. The market is neither bullish nor bearish. Resistance is going to be 1938, followed by 1943, and support is 1918. This market is just like, we couldn't get above that 1923.6 to save its life. And as I said the prior week, I said, but the only thing you could say after struggling for over 2 weeks down here is that it just wasn't going lower. Now, we did pop up. Now, that pop-up was a result of some bad Latin American news. But that being said, we quickly gave that back, signed below 1923.6. Then we actually reclaimed it yesterday, and so that's where we're at right now. So our resistance we mentioned is going to be 1938. If we were to get beyond that, we'd be looking at 1943. But for right now, we have that listed for 1938 with support at 1918. And with that, we'll go and move into the dollar yen. So the dollar yen is in a sell the rally mode regardless of how high equities go. And today, this morning is another good point. I mean, look, new highs again, and the dollar yen's like, I don't care. And I mean, that's the attitude for the dollar yen. Like I said, we've been saying, seems like, over 2 weeks now, but the dollar yen reminds you of that song, the things that make you go, And like I said, it's just, I don't want to say it's doubting this rally in U.S. equities. It's just simply ignoring it, or it sees something that, once again, like I said, if these equities, U.S. equities, do see a little bit of a pair back, we wonder when that's going to happen. Hang on to your hats on this dollar yen. That thing will slide like nobody's business. So, says resistance is 893 with support at 832, followed by 808. So resistance is going to be 893. And support is going to be 832. Well, I don't know what to think about with these equities still pushing higher. Let's go into the Keystone Index. So the dollar index closed below the key level of 97.89, opening the door for an eventual challenge to 97.20. Resistance today is going to be 97.95 with support at 97.51, followed by 97.20, which is where we think the market will go to with that close below the 97.89. But today's resistance will be 97.95. And support 97.51. With that, we'll go and move into the cross rates. Well, the Kiwi yen, we've been stuck in this level area here. You can see that. Look at this. This has been going on for nearly 3 weeks, almost. We're just trapped in this range here, and we're just not going anywhere. And with that, there's no change here. The upside, we're looking at 70.48, and that may seem like a long ways from here. It really isn't, but you can see how dead this market's been. And I didn't want to just put the high right there, because you can easily trip the stops. And where would we go to? Well, we'd be going to 70.48. So that's the real resistance to 70.48. And then our bias chart support is 68.89 if we were to break to these lows down here. But we're just not going anywhere here on the Kiwi yen. We're going and take a look now with the Euro yen. We had dipped a little bit lower this last week here on the weakness of the euro, strength of the yen. The resistance is going to come in right there. You see that? We've got actually, our bias chart resistance was shown at 20.88. You can see a little bit closer. It's going to be right there, this close, right there. That's resistance, which is 20.88, which is what we had. And support we had for 1970, right there. You can see this cut right here, coming in here and here, right there. So 1970. And we're trapped in a very tight range here. And once again, the euro yen used to be a real big high flyer, remember? And same thing, just very, very quiet trading. Let's go on and move into the euro odd. Well, we got the news out of the RBA, and that's weakened the Aussie, but also the euro at the same time is giving back a little bit. And we're actually forming, you can see this is a classic gravestone doji if it were to close like this. Absolutely classic. Look at that. Gravestone doji. If we were to close here, we did try to go and push a little bit higher, obviously on the overall weakness for the Aussie. And we had a resistance at 62.86. We'll actually have to revise that. We'll actually move it up here right to this level, especially with the potential for obviously the weekend, which would be 63.41. And another thing is also with the weakness we're seeing in the Aussie, you would think that will put a little bit of an undertone bid here. We're actually just going to move the resistance just a bit right there. You see there? Right there. It's going to come in at 61.46. I'll just lower just a bit here. Yeah, no, it comes in right there at that high too also. You can see here, look. Right there. 61.46. Let's go move into the Euro Kiwi. This is another pair that's just been languishing. Resistance is going to be right here at which was the apex before. We've kept that triangle there, which is going to be 74.02. And we're going to go and keep the support the same from yesterday, which is 71.64. We may just kind of look and just end up rotating a little bit lower. Let's go and move into the ASEAN. Well, we have been weaker, and we're kind of just holding our own around this area here. Really nothing that you can point at of any real significance here. We had our bias chart resistance yesterday from yesterday at 74.69. We're actually going to move it right in here. You see the close right here? That's actually going to be our resistance for right now. It's going to be 74.46. This is another one that's really surprising when you think about where equities are. And even if it wasn't, let's say that the Aussie's struggling, blah, blah, blah. Wow, to think, look at these ranges are just pitiful, you know? A lot of people used to trade this as a proxy, you know, for trading equities. If you don't want to trade the S&Ps, you could just trade the AUN, but no movement for the most part. Support, we had a 73.57, and we're keeping that 73.57. And actually, it looks like the low for the day was 73.60. So that's going to remain the same, and we'll move now into the guppy. Well, we're still continuing to move a little bit higher. We have almost looked like a little bit of a gravestone doji from yesterday, but we're still holding our own here as the yen just weakens just a bit. No changes here. Resistance is going to be, you can see that 41.82. There you go. 41.82 you can see on that upside, and downside 40.28. No changes. And looking at the sterling odd, well, resistance continues to remain this key level, 90.58. And we broached it today. Look at that. But this is a key level going way back here, 90.58. We did the analysis over the weekend, and actually a daily close above 90.58 is really going to open the door for a potential move to 94. Not saying we won't take some pauses until then, but it really would open the door. And potentially, I'm surprised that we're not even higher with the weakness we've seen in the odd. But eventually, we may end up getting there. We do have, at least which is forming just a bit, at least for now, but the day's still young, which would also potentially would be a gravestone doji. So 90.58 is going to remain the resistance, and we're going to keep 88.50 as our support. No changes there. Moving into other markets. Well, despite the newer highs in equities, crude has not moved higher. We're just kind of stuck near these lows, and crude has just been, you know, I was talking to some of the guys in the chat room. It's simply just been following the equities, but in a perverse kind of way. One day, if you look at it on a daily chart, one day you're up and you finish close to the highs. The next day you're low, you finish close to near the lows. Then the following day you finish close to the highs. It's just been look at that, just up and down, up and down. But the thing is that what happens is it either runs you over. I've been one of the people that did get run up. Not bad. I mean, I actually came in, I think it was not last Friday, but the Friday before, came in at a very good level after the market rally. And it kept on rallying. Then, of course, that Monday came in and then turned around and gave up all those gains. Then Tuesday turned around and ran up. Then Wednesday turn around, right? That's what I'm saying. So saying, forget this. What's the point of trading it until eventually, like, look at this. Up, down, up, down, up, down. I mean, it's just been like that. It's just like, in a sense, trading nonsensical. I'm like, well, you know what? I'll come back when things aren't just acting a bit nutty. Either you're going to be going lower or you're going to be going higher, but this up and down like a yo-yo doesn't even make any sense. And the point is there's not even good two-way activity in there. We actually saw the market sell off yesterday and then just sat there for the longest time. So we're actually not even responding now, which lately we've been doing that for the last 2 weeks. I think people are now just not participating in this, but we see it kind of react to the equities, and then you'd go to sleep. It would go to sleep, and then it would bolt up or bolt down. Bonds are trading relatively quiet. Gold, after making that move up to 1475 and dipping back, we're actually coming up under a little bit of pressure here. But that has to do with the, and we had a very nice dip for that 1475 all the way down to 1457, a nice rally back, but with the strength in equities. It's paring back, but still isn't paring back as much, although it's had a pretty decent sell-off compared to what you see here in the equities. It's just like, wow, these moves are just something else. But that's what we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room. Have a good day trading.